Hello, and welcome to Rocket Fuel, your daily update of everything that's happening in the Rocket Pool and Ethereum ecosystems. My name is Wack. Today is May 3rd. Today's episode is going to cover some of the new smart node stack version 1.13.1. We're going to be talking about RPIP 53, which is the version 10 of the rewards tree. We're also going to be talking about the EigenLayer airdrop and some changes that's happened to that, and some regular Ethereum news. So let's get started.
10, 9, ignition sequence start, 6.
So here we have an update from Phonax, and this is about a new smart node update. And this is version 1.13.1 of the smart node. It's a recommended update for all users. It contains important client updates and fixes. So here we have client updates. Here we have gETH, Nethermind, Teku, Nimbus. There's Node Exporter that's updated to 1.8.0. Prometheus has updated, and Grafana has updated. With the smart node changes as well, we get gETH archive node mode option to the terminal user interface. We've also added EVM timeout TUI parameter for gETH to help avoid timeouts during heavy load tasks. Also, there's some Grafana execution client peers query that's been fixed, and the rETH RPC cause parameter as well. Fixed checks for the host that registered pre-Houston, and improved the PDAO voting power command. Improved snapshot on-chain messages on node status. Thanks to Ken and Buidl for the feedback. And then we also have fixed starting the smart node with alerting enabled and metrics disabled. Thanks to Active Scott for the contribution. And fix the RPL withdraw regression from 1.13.0. And then to install it, you follow the details, and that's it. So as always, I think there will be a POAP for this. I haven't seen the POAP for this yet, so maybe I missed it, but I'm not sure if there's been a POAP created for this or not, but normally there is a POAP. I guess we've got to get Shifrin to get on that. Okay, next we had a community call this week that was hosted by Jasper. Well, Ken helped out in the beginning because Jasper was running a little bit late, but it was hosted by Ken and Jasper, I guess. The guests this week were Polygon ZK EVM team, and the reason why they were on is because they're taking big steps towards integrating rETH on their platform with lots of incentives and lots of really cool things going on there. They were talking about how rETH is going to be used in different protocols, also how there's this idea of liquidity incentives potentially coming up that will boost rewards even more than they currently are. On top of that, we are also going to see that there are a bunch of apps and tools on ZK EVM who haven't had their airdrops yet. So if you are interested in using Polygon ZK EVM, there's a whole bunch you can do with rETH there. Also, like I said, you can find some airdrops in the process. So that's pretty exciting. Now, the second half of the call was kind of a Q&A with Langers, and there was a whole bunch of really interesting things that were covered in that. They talked about how Langers and the team want to talk to some lawyers about the different fee capture mechanisms for RPL, but the lawyers that they really want to talk to are either Consensus or Coinbase's lawyers, because those are the ones that have best relationships with, but they're kind of busy with the SEC stuff. So they're trying to figure that out. They talked a bunch more about the Houston upgrade and how that's all going to go, and touched on the Saturn upgrades a little bit as well. So definitely give that a listen. It's an hour and 10 minutes, and there was a lot of really cool information in that call if you want to get that. Right, so here Joe had a post saying, hey guys, RPIP 53 has been merged, and there's a sentiment poll up to gauge what people think. I'd like to know what everyone's stance is, so let me know here. And then there's a link to the forum, so let's go have a look. For those of you who don't know, RPIP 53 is the reward spec version 10, and this will change how rewards work post-Houston, and there's some changes from patches version 9. So what we get here, we talked about this on Rocket Fuel last week, I think, or 2 weeks ago now. But what's happened since then is that there was a bunch of discussion that came up about how the RPL withdrawal address, how that's set up, and there being potentially some issues with how all that's going to work. So the main person who was kind of getting the information out was Ramana. So this went to a vote sentiment check. It says the RPIP has been merged. Let's do a quick feeler to see what people think. I support version 10. I support version 10, but only if the PDAO agrees to fix the issue in Saturn. I do not support version 10. So the results that they currently stand is 73% saying I support version 10, with 27% saying I want the issue to be fixed. And the people who are saying the issue to be fixed are Ramana and Patches and Dates. Osho says, what's the issue and how does fixing in Saturn look? So Ramana says, I want to state my understanding of the situation. My opinion is that this RPIP in relation to Houston, to give some clarity, I explain why I voted the way I did in the poll. It says the situation is that Houston contracts are broken regarding the treatment of RPL withdrawal addresses. I believe this was discovered late enough in the development process that the option of fixing the contracts was taken off the table. So instead we have to do a workaround via this part of the RPIP. There's a possibility of fixing the contracts in Saturn, but so far no firm commitment is either around the timeline for Saturn, nor that the issue will even be fixed in Saturn. To ratify this RPIP would therefore, to me, also mean signaling that the PDAO is fine with contracts being broken in this way. This is not something I can endorse, and I would therefore vote against it. I'm sympathetic to the view that we don't want to delay Houston release. To reconcile these views, I'm open to going forward as is without fixing the contracts if I can get a firmer commitment to fixing them in Saturn and some sense of timeline for when that would be, i.e. how long would we be in a broken state. I've heard arguments saying that the issue is not worth worrying about because it's probably rare and only affects weird node operators. However, the full extent of the effort has not been fully documented, and it's not out of the question yet that the fund of weird node operators could get locked up because of this problem. I don't think this is a defensible position for Rocket Pool as a protocol, especially since anyone could accidentally become a weird node operator if they aren't paying close attention to what the bug is and how to avoid it. Reading all the text in the RPIP like this in detail and or paying close attention to all the messages in the governance channel on the Discord. What's the bug in the contracts? Essentially, the issue, as I understand it, is that the contracts only allow claims of tree-based rewards by RPL withdrawal address if an RPL withdrawal address is set. This is buggy because the RPL withdrawal address should not have dominion over smoothing pool rewards, but smoothing pool ETH rewards are included in tree-based rewards. RPIP 53 works around this issue in many cases, but not for the case where the RPL withdrawal address is also a registered node operator. In that case, it simply gives up and says, don't do that, you could lose your funds. We don't make any promises about what could happen. So Ramana says, my preferred outcome given this situation would be one of the following: fix the contracts before deploying Houston to precisely allow reward claims from the correct addresses, commit to fixing this problem in Saturn with a clear timeline, and ratify RPIP 53 in the meantime, and make a clear declaration of the risky scenario to be avoided for all node operators in the meantime. And then there was some more discussion here. Ramana shared a screenshot, and Joe says, I've added to an appendix that replaces the Here Dragon's note with an example of how various scenarios could play out. And then there's that information. It says this should help when deciding whether or not to support the proposal. So that discussion carried on going, and then this, I support version 10, but only if the PDAO agrees to fix the issue in Saturn. And then there was some more discussion as well. So this is quite a technical issue. So you should definitely go and give it a read. But I think it looks like people are mostly in support of it, but it's something that should get fixed. So that's why I voted to fix the issue in Saturn. Right, and then here Ramana was talking with other people in trading, saying, are all you folks voting I support version 10 actually aware of the issues that need fixing, or just going with the flow? And then Sneaky says the issue with who the claimer is. And Ramana says yes, and says turn that bug into a feature. But then Osho says, I'm asking questions. All the voters clearly know more about it than me. And I think what happened is people just kind of said, yeah, it's fine because it's coming from Joe, whereas there's still some issues. So you just kind of have to look a little bit closer to see the issues, and I think it makes sense that we get a pledge, that this will be fixed later. Okay, next we've got this post from Phiz on Reddit's rETH finance page, and he's talking about how he's becoming a NodeSet node operator. So he says, I'm becoming more interested in NodeSet. I'm trying to figure out how to describe it best, and I think I'd call it a bespoke validated services layer. They're not a traditional restaking platform or AVS. They're developing a pool of operators, whether they're node operators or validators who can be assigned to specific tasks by the platform, which are contracted by interested parties. So I'm still wrapping my head around it, but it's significantly different from restaking factories, and I think I'm more comfortable with this design. The first trade-off is the makeup of the pool. You enter NodeSet by having a light KYC conversation with NodeSet founder. You don't need to provide your name, only to show that you are a real and unique person. Then you sign a message with your validators to show you control them. You don't need to change your withdrawal credentials to give the platform total control of your assets. I think the future plan is to implement more of a DVT solution that can remove the KYC requirement and allow anyone to participate. The overall design is more like pay for work completed, so it doesn't have the built-in ability to slash or extort you. I find this to be much more aligned with Ethereum consensus than other platforms. NodeSet's first product is a coordination with Stakewise, where NodeSet will host the first decentralized Stakewise vault and issue novel LST on Stakewise. I think it's a win-win for NodeSet and Stakewise, and I plan to participate a bit. NodeSet emerged from Rocket Pool community. There are some similar routes. They're building carefully and methodically rather than making wild promises and issuing points. I know different people prefer different takes on development. I'm still in the build slowly and carefully camp, even with the fast pace of crypto. Anyway, I talked to Nodes with Nick S and Wonder yesterday and effectively said, I've been looking for something to get excited about, and I think NodeSet might be it. They're not giving me anything or offering any compensation. They don't have any token plans in the near future. But obviously, anything that's successful in crypto will eventually have a token. If I do or don't talk about it, it's true organic excitement, not my bags talking. So I've talked about NodeSet a bunch on ETH Finance and on Rocket Fuel, kind of explaining how it works. I've also been selected to be a node operator for NodeSet. I'm most likely to take part in their Constellation program, which is people staking their ETH and RPL, for their users on Rocket Pool. So they're dividing the relationship between the RPL holder, the Ethereum, the ETH holder, and the node operator. Because right now for Rocket Pool, the same person pretty much has to be all three of those. Whereas NodeSet is dividing it all out. So the RPL holder can be different, the ETH holder can be different, and the node operator can be different. So they'll be sending me ETH and RPL. I'll be staking on their behalf in a trustless way. And that will hopefully be going live potentially in August, which I am really excited about. So I'll definitely let you all know how that goes. Okay, next we had an update from Moist Owlbear. Owlbear, for those of you who don't know, spends a lot of time in the Ronin and Axie, I guess, communities. That's where you might know Ronin from. It's a bridge that hosts Axie Infinity. And he says, I want to let you know I've started working on my Ronin network proposal once more. This is part one of my journey into my proposal. If this goes through, the next step is explaining and exploring the third systems I'll be using, including Rocket Pool. So let's have a look at what he's saying. So he's saying that here we have Ronin ETH staking module contract analysis. So what he's suggesting is that any ETH that is sent on the Ronin bridge will be swapped out for staked ETH. And the staked ETH that he's talking about is using Rocket Pool's rETH and Stakewise's OS ETH. So it's actually really cool that Moist Owlbear is setting this up. The process is quite long, but he's already had some positive feedback from the Ronin team, and it seems like it's something that they want to do. But here, like, you can read this information about the staking module in the link below, so you can get all the information you need. And Moist Owlbear is quite receptive to discussion on the Rocket Pool Discord. So if you are interested in that, definitely go and check it out. Okay, next we got an update from stake.rocketpool.eth about all the cool things that are happening in DeFi with rETH. And they said that the leading APR this month or this time is PancakeSwap. So you can currently earn 21 or 22% APR on your PancakeSwap rETH ETH pair, which is absolutely amazing. And they're back to number one. So that's really cool. And then there's some other pools here. There's Balancers giving about 14%. You can also get up to 11.5% on Balancer on Base. Balance and Optimism is giving 14%. There's some really nice rewards out there. And then on mainnet, you can get about 8% on Gamma. And these are our ETH pairs as well. And then if you want to look at the whole document, you can go to rpldefi.com and check it all out. So yeah, there's some really nice rewards out there if you are interested in trying to farm those. But definitely like yield farming those. But check it out. Check out rpldefi.com to see the whole list. Okay, so on Wednesday's episode, we had the GMC raffle that was drawn, and Waldorf won $250, Long for Wisdom $150, and Dondo won $100. Dondo is really funny because Dondo's a GMC member, and there was a period of 1 month where Dondo, provided feedback but wasn't a GMC member at the time, and because of that one ticket, he got $100. So this is just a really nice way of incentivizing feedback for the GMC, and I think it's going to be something that's really valuable. And now you can just get a little bit of a token of appreciation from the GMC as well if you do this going forwards. So this is for rounds 1 through 11, and going forwards, I think this will become a semi-regular thing, and maybe we'll have some more prizes as well. It's really cool. Okay, next we're going to move on to some staking news, past rocket pool news. So here we have Hildobby sharing some screenshots about LRTs and LSTs and how it's working. So we can see here, this is the how much ETH is staked through LRTs. And you can see the line has pretty much gone vertical from compared to a year ago. It like around January this year, the uptake of LRTs just went like vertical pretty much. And then on this next tweet here, Hildobby shares that the thing that's happening is that it's kind of eating away at the market share of LSTs. So LST market share has gone down, LRT market share has gone up. I think what's going to be really interesting to see is once all this EigenLayer stuff is done and all the points are distributed and people have kind of farmed like EtherFi and Swell and Renzo and all the others out there, how much of that liquidity is just going to stick around. It's going to be really interesting to see that. But see how much of that comes back to LSTs, how much of that stays in LRTs. I'm definitely going to be keeping a close eye on that. But it looks like LRTs are basically eating LSTs' lunch right now. And I'm going to definitely keep a close eye on that and see how much that keeps doing that in the next coming months. Okay, speaking of staking and EigenLayer, let's actually get to some Ethereum news now. So here we had Eigen Foundation giving an update on their airdrop, and this is actually really interesting because they're actually giving more tokens to different people, and they've clarified a lot of their information as well. So the minimum amount that people had gotten before was 10 Eigen tokens, and that was, for any small interaction, just a minimum amount of points. Everyone was up, like they would given 10 tokens. However, that's changed now, and everyone will be getting 110 tokens with a boost of 100 tokens. So if you had previously gotten 10, now you will be getting 110 tokens. If you had previously gotten 200, now you'll be getting 300 tokens. And that is for everyone who was staking before April 29th. That's for people staking before April 29th. And then there's some clarifications they give as well. So it said the lockup countdown for the people who are vesting, that will begin after the token generation event, that will begin from the token unlock, not from the token generation event. So there was this idea that the tokens will be dropped now, and then it would be vested, and then after the unlock happens, the people who vested, they'll be able to get the tokens much sooner, and that's something that happened with the Stark airdrop recently. However, with the EigenLayer, they said that their vesting period will start on the day of the token unlock. The second thing they said was that they gave some timeline, and they're targeting for the token unlock to happen on September 30th. And then they also said that testnet operators will be getting some allocation as well. So that will be happening in phase 2 of season 1. So there'll be some more addresses that are given there. So it's going to be really interesting to see how this all works out. I'm not sure exactly which cohort the tokens are coming from. It might be from their community pool, but people seem to have responded a little bit more positively to this compared to the news from last week. I think the other thing as well is that most people have realized that you can, you'll either probably be able to find ways using a VPN to claim your tokens, or you'll be able to use Etherscan to claim your tokens. So that's what I'm going to be showing in a week's time. I'll make a video to show you step by step of how to claim your EigenLayer tokens using Etherscan. I'll show you all the different wallet interactions and stuff that happens with that. But it's quite a straightforward process, and I think that it shouldn't be too bad. But EigenLayer here definitely trying to appease some of their criticisms. With that, they also wrote a blog post. So it says, update on the Eigen stake drop, message to our passionate community. So they're just like that tweet, they're just kind of explaining different things. And there's a whole lot of legal stuff there as well. So you can go and give that a read if you are interested. But everyone's going to be getting 100 more tokens. And it might also be the case, like if you were farming with multiple airdrops, they're saying that they're going to use anti-Sybil distribution. So it says this decentralization was key rationale for the original anti-Sybil distribution, but the feedback we got from real users weighed heavily on this revision. So that's pretty cool. Okay, next we got this great episode from Bankless, and I was listening to this and it really pumped me up. I was really happy about this. So this is a Bankless episode called Ethereum is Under Attack. And in this episode, we had Joe Lubin and Mark Corver, who work with Consensus. Joe Lubin, of course, is co-founder of Ethereum and the founder of Consensus as well. And Matt Corver is does law. I think he's the CLO, the chief legal officer, I think, but I'm not sure. But one of the big lawyers at Consensus. And in this episode, they really, it was really really great stuff. Joe Lubin was really fired up, really passionate, really explained why he thinks Ethereum is not ETH, the token is not a security, how the SEC is being way overstepping their jurisdiction and their rules. And you should definitely go and give this a watch. It's an hour and 5 minutes long, but they cover some really cool topics. So I really wanted to give this episode a shout out because I learned a lot from it, and I also thought that if you are feeling a little bit down about all the SEC stuff, then you need to listen to this to get you fired up. Okay, next we had a clarification from Eric Balchunas about what was happening in Hong Kong with the ETFs. So a few days ago, we got this number saying that $11 million of flows had happened, and basically that the amount of money coming into the ETFs was not that much. Well, it seems like that was wrong. And what happened is the Hong Kong ETFs work in a different way from the way the US ones do. So in the US, what happens is you have some seed funding, and all that money is set up and set aside getting up to day one of the launch, and then that counts as inflows on day one. However, in Hong Kong, they don't set up the numbers the same way. So the seed funding that came up wasn't counted in those early days of numbers. So what's actually happened is we've had $292 million in assets on day one. And what's really interesting is here, Eric Balchunas was saying that they'll probably get 1 billion assets over 2 years. So that's really interesting to see how that these flows are actually really good. But he's saying that there's could be corrections along the way, so let's not get too far ahead of ourselves. And the Ether ETFs grabbed 15%. That's actually a little bit lower than I thought. I thought it would get about 25%. But at the time, Eric Balchunas last week was saying that it would get about 10%. So it's actually above 10%, but less than 25 to 30%, which is what I was thinking. But that's okay. But these ETFs are working well, I guess. Their fees are a bit higher than the US ones, but they're going well. So the confusion of volume here, he explains it. He says 292 million is assets that we were put in as seed capital right before launch, so didn't register as volume. In the US, they push seed dollars off until the first day, so volume looks bigger and it helps with marketing. There's more cutthroat like that here. So that was the distinction of why that happened like that. Why it was 292 million in assets versus 11 million inflows. Okay, next I want to shout out this Buidl fund from BlackRock about how it's become the biggest tokenized security on Ethereum, and the fund has now hit $375 million assets under management, and this passes Benji, which is Franklin Templeton's on-chain mutual fund, by about 7 million, which has taken it a year to get to. So the Buidl fund has captured 30% of the $1.3 billion market in just 6 weeks. So this is like amazing growth from the Buidl fund. It's going to be really interesting to see how if they have more funds that come online and how they're all going to work. But definitely this is very interesting to see how that's happened so far. Okay, next we have this update from Nick talking about Ethereum's data availability and how it's been like really amazing. So as you all know, we have blob space now for layer 2s, and they are priced at 1 GUE. There's 3 blobs per block. And if we're not using 3 blobs per block, then the fees stay at that rate, that one way. However, once you start getting above 3 blobs per block in demand, that's when the prices will start going up. Now, here Nick is saying that this was actually priced perfectly, and the Ethereum Foundation and the research community nailed it like really well. And they don't expect the blob space prices to stay at this level. But so far, it's been a month and we're still seeing sub-cent transactions on layer 2s, which is absolutely amazing. If we have a look at Ultrasound Money and their blob market, you can see that over the last like 7 days, it's just been one way the whole time. Like it's not gone above that. With the 30-day chart, you can see that right at like a month ago in the first week of April, there was like blob subscriptions were going on, but that fizzled out really quickly. And that burnt 8 ETH of fee through the fee market, through the gas market. But looking on the shorter timelines, like a week, the max, like it's just not reaching those points where the fee market is coming into practice. It's really, really cool to see that it's worked so well. And like Nick here is saying, they don't expect this to last forever. But then the great thing is that as layer 2 demand increases and like blobs actually start having a price, then in the next hard fork, we can increase the number of blobs if we wanted to, like to go to 6 to 12, like to whatever we want. And that's really, really cool. Okay, so next we've got some more layer 2 news, and related to that, because blob prices are so low, gas prices on layer 2s are so low. So Base is actually onboarding 50,000 to 100,000 new users every day, and they've gone to total users have gone up to 8 million users now. Right here at the end of March, you can see pretty much like a vertical line with people coming online right after the recent hard fork. And then since then, it's just been like a vertical, like pretty much up only line. This is really cool. And it's not just Base that are getting people online, but Base is one of the clearer examples of this. It's like really caught a lot of hype, the post Denkun. Now, why is this happening, right? I think Base has got a few interesting things going in its favor. One of them is, like degen tokens and things like that, and it's got building a meme coin marketplace. But on top of that, Base, like Coinbase themselves, are doing some really, really cool things. So here we have, Jesse Pollack saying the best on-ramp is no on-ramp. This is a new wallet style that will let you link your assets from Coinbase and bring them on chain. Luke Youngblood says Magic Spend will let you buy tokens on Base directly from Coinbase in a single transaction without having to pay any gas or fees or download any app or wallet. I don't think anyone is prepared for the superpowers Coinbase is about to give 110 million retail users. This is a key thing, right? Like Coinbase's Base has this built-in audience that they can like funnel into the Base ecosystem. Coinbase can funnel them into the Base ecosystem. Now for Arbitrum, Optimism, and the others, they can't do this because they don't have that audience like already captured in a sense. I think this is going to be really amazing, like to get 110 million more people online on Ethereum layer 2s is going to be absolutely amazing for Ethereum. So these are the things that they're doing, right? They're really pushing the boundaries of like really cool tech innovations and user optimizations. So huge kudos to Base for that. Okay, EIP 1559 went live 1,000 days ago, and in that time it burned 4.2 million ETH, which is actually amazing. And the burn rate was equivalent to 3 ETH per minute, and it offset issuance by 1.7x. Now, if we have a look at Ultrasound Money, we can see that recently ETH has been inflationary again. I mean, that's okay. It's just different gas markets. The way it works is, right now we're in a low gas demand period, and like normally those periods don't last too long before we start burning again. There's this great saying about Ethereum, right? Like we have capped issuance, but we have uncapped burn. So many weeks of issuance can literally be burned away in a matter of days if there is, if there's a period of high demand. And this is what we've seen since the merge itself. We burned 431,000 more ETH than we've issued. So that's 1.6 million ETH burned to 1.2 million ETH issued. If we go back all the way to the beginning of EIP 1559, we have burned 4.28 million ETH, but we've issued 7.1 million ETH, 7.2 million ETH. So the burn has been doing a really great job. We're not quite below the 120 million ETH mark yet. We were hoping that we would have gotten there by now, but this is still really cool to see. Like that 4 million ETH, over 4 million ETH has been burned in the last 1,000 days. Okay, next I'm going to share this tweet from Anthony Sassano saying, make ICOs great again. And I think this is really interesting to see because this whole airdrop and like airdrop farming meta has actually like, people are thinking of it as quite a bad experience, as a user experience. What happens like you lock up your ETH or your tokens, or you interact with a protocol that you don't really care about, and what you get in return is an airdrop where everyone complains. Eventually, nobody's happy with it. But with ICOs, what would happen? This was like the peak of the 2017 bull market, where a protocol would come forward and say, we have this idea. Here is our white paper. This is what we want to build. In return, we are selling, like 20, 30, 50, 80, 90, 100% of our tokens. And we want to raise this amount of ETH to do that. That ETH would then be used to fund the development of the protocol for the sales of those tokens. Now, there were some really interesting projects that did come up out of ICO funding, but sadly, a lot of ICO funding went kind of nowhere. But people did make money on it. People made really big money on it in 2017. In fact, that was one of the reasons why Ethereum pumped to the levels it did. Like the ICO mania was really one of the things that led that whole bull market. Now, with making ICOs great again, I think the reason why we don't have ICOs now is because a lot of people think of it as a security sale, unregistered security sale, which is why like it doesn't happen that much, especially in the US. There are some platforms that let you do ICO funding, like CoinList, which is an exchange, lets you partake in some ICO funding through there. One of the famous ones that came up through CoinList was actually Solana. There was a chunk of the funding that they raised was through an ICO on CoinList. And there's been a whole bunch of other projects that they've had on their ICOs as well. But I think the great thing about ICOs was like everyone knew what they were getting into, even if it was like vaporware. But everyone was kind of on the equal footing. It wasn't like VCs with like vested tokens and then being able to get in like really early rounds and having 100x profits before the token even like starts selling and stuff. So I think ICOs in that sense were really great. It'll be interesting to see if we can get them back in any form. In the US, I don't know if that's going to happen, but maybe in other jurisdictions that hopefully will happen. Okay, and finally in today's episode, we're going to finish off with the raffle. So this is for contributors for April. Sneaky here was number one again with 37 contributions. Jasper and myself were ranked second with 31 contributions each. Samus has been doing really well recently, up to 27 contributions in April. So these are going to go into the raffle now, and the top 8 people will win prizes, with 2 prizes already being set aside for contributors to Rocket Fuel. So this month we also had 37 contributors, which was really cool to see. So as always, I'm just going to copy this. If I win, of course, that's going to be skipped over. So let's paste it here. And yeah, so let's go and see who's won prizes this month. So Sneaky Ninja Guy gets prize number 1. Not You, Jasper, Shifrin, Socash, Samus, Whack, that's me. I don't get prize. Patches, congratulations Patches. And Super Phiz. Oh, that's so cool. Super Phiz gets a prize. I think it might be Super Phiz's first prize, and he only had 1 ticket as far as I know. So that's really cool. Congrats, Super Phiz. Via sadly misses out unless one of these people don't provide me with their wallet details, in which case Via will get a ticket. Now let's have a look to see what the prize is. So I will go to Binance. RPL currently is $20.56. So 100 divided by 20.56, and that equals 4.86 RPL per person. 4.86 RPL per person. So thank you everyone who contributed. Congratulations on your prizes. And there'll be a pull-up for all the contributors as well. On that note, thank you all for watching, listening, and being part of the Rocket Fuel community. Sorry for missing yesterday. I was sick. However, there will be a ROG Fuel pull-up that will hopefully be going out this week. I'm really excited about giving that out. So once again, thanks everyone, and I will see you on Monday. Bye.